All right, so we've got a pretty hefty stack of research here all about investing,
Oh, yeah?
stocks, real estate, even crypto.
It's a lot.
It is a lot. And whether you're someone who's, already out there dabbling in these things or you're just starting to think about how to grow your money, I think this is going to be a really interesting deep dive.
I think so too. And, I've been doing this for a while, but even I was surprised by a few of the things these sources dug
Hmm.
into.
Oh, really?
Yeah, they really take it beyond like the basic investing 101 and get into some like pro level moves.
Okay. I like that. Pro level move. All right, so stocks.
Yeah,
Everyone always says buy low, sell high.
right.
But that always makes me think, oh, how do I know what's low?
Yeah, exactly. And these sources really seem to get at that. Like, how do you actually evaluate a company?
Hmm.
One of them used this analogy I really liked. Before you invest in any stock, imagine having to explain that company's business to a friend. Like, do you really understand how they make money? What their challenges are? Who they're competing with? That's the level you kind of need to be at.
That's a really good point, I think, for a lot of people, and I'm including myself in this.
Sure.
It's so easy to just get completely overwhelmed
Oh,
by all the information out there. Like, how do you even know where to start?
right.
That's where I think this idea of like index funds and ETFs for
Yes.
beginners makes a lot of sense because you're not really picking individual companies. You're kind of like spreading your bet across a whole sector of the market.
It's diversification in action.
Hmm.
And these sources actually do a good job of explaining why that's so important.
Okay.
One of them compared picking individual stocks to betting on a horse race.
Oh,
You might get lucky with one long shot, but over time, betting on the whole field statistically makes more sense.
I see. So you're kind of capturing the market return rather than trying to beat it.
Exactly,
Right.
especially as a beginner.
Yeah. Makes sense. But let's say I have done my research. Maybe I use some of the tools these sources talk about, like Seeking Alpha.
Okay.
And I think this one company is really undervalued, so it's a bit of a calculated risk, is that when you jump into individual stocks.
Exactly. And even then, these sources all emphasize this idea of dollar cost averaging.
Okay.
And this applies no matter what kind of asset you're buying.
So explain that. What is dollar cost averaging?
So instead of trying to time the market perfectly, you invest a fixed amount regularly.
Mm-hmm.
So let's say every month you put in $100.
Okay.
One source pointed out that this actually makes downturns easier to handle psychologically
Really? Why is that?
because you're not sitting there thinking, oh no, I bought at the peak,
Yeah.
because you're still buying and potentially getting a bargain at that lower price.
That's interesting. So it's taking the emotion out of it.
Exactly. It's a more systematic approach.
Okay, so that's a good foundation for stocks. Now, what about real estate? I feel like this is something that's always presented as this like super stable investment,
Right.
but it also seems really hard to get started.
Well, and the sources actually break down several different ways to invest in real estate.
Okay.
From the classic, owning a rental property to REITs, which are kind of like stock market versions of owning buildings.
Okay.
And what I appreciated was that they don't just say real estate is good. It's about choosing the right type
Mm-hmm.
based on your goals and your experience level.
Right. It's not one size fits all.
Not at all.
So let's say I am intrigued by the idea of, owning a rental property.
Sure.
One source highlighted this thing called the 1% rule to quickly evaluate if the rent will cover your costs.
Yeah, it's a good starting point.
But is that really enough to go on?
Well, it's a good rule of thumb, but these sources get way deeper than that.
Yeah.
One of them had this super detailed breakdown of all the factors to consider.
Like what?
I mean, not just the purchase price, but closing costs,
Right.
potential renovation expenses, vacancy rates in the area.
Ah.
They even talked about like factoring in potential increases in property taxes over time.
So it's a lot more than just the 1% rule.
Oh yeah, it's a much bigger picture.
Okay, but if I do get all those numbers right, that's when the like pro moves come in, right?
Yeah.
Like using leverage, borrowing money to amplify returns. That's something I always hear about, but honestly, it makes me kind of nervous.
Yeah, it should make you nervous.
Okay, good.
These sources don't sugarcoat the risks at all.
Okay.
One of them actually compared leverage to adding nitrous oxide to a race car.
Oh, wow.
You can get you ahead fast, but if you don't know how to control it, you're going to crash and burn.
Yeah, that's a good analogy.
So you really need to understand the market conditions, your own financial stability, and
Yeah.
have a solid plan for handling downturns.
So location, location, location isn't just a catchy phrase.
No.
It's about making a smart bet on where the market's headed.
100%. One source put it this way. You're not just buying bricks and mortar. You're buying into the economic future of that neighborhood.
I like that.
Yeah. So are jobs being added?
Yeah.
Are schools improving? Is crime going down? These are the real drivers of long-term value.
Okay, so we've tackled stocks, we've tackled real estate,
Yeah.
ready to venture into the Wild West.
Let's do it.
In crypto.
This is where the sources really get interlinked because they acknowledge the hype, but then cut through it to give some really practical advice.
Well, it feels like everyone and their grandma has an opinion on crypto these days.
Oh, yeah.
And it's hard to separate signal from noise. You know what I mean?
One source made a point that really resonated with me. It's not enough to just understand the potential of a particular coin.
Okay.
You need to understand the underlying technology.
So blockchain.
Blockchain, exactly.
Okay.
Because that's what allows crypto to even exist.
Right.
It's like investing in the internet back in the 90s, knowing how to build a website was way more valuable than just buying a bunch of .com stocks.
That's a great analogy.
So, you have to look beyond the hype and understand the fundamentals.
So does that mean I need to dive deep into white papers, understand the code? I mean, that seems pretty intense for a beginner.
Well, the sources acknowledge that crypto can be very technical,
Right.
but they also offer some more accessible starting points.
Okay, like what?
One of them suggested thinking of it like exploring a new city.
Okay.
You might not be ready to navigate the back alleys, but you can start with the well-known landmarks, right?
Yeah. Right.
In this case, establish coins like Bitcoin and Ethereum.
Okay, so sticking to the main tourist attractions before I venture off the beaten path.
Exactly. And just like with stocks and real estate, diversification is key here too.
Okay.
Don't put all your crypto eggs in one basket.
Right, so how do I diversify within crypto?
Well, the sources recommend considering the market capitalization of different coins,
Okay.
the team behind them, and importantly, their real-world use cases.
Use cases, okay.
What problems are they actually solving? That's where the long-term value lies.
Right, it's not just about speculation, it's about understanding the utility.
Exactly.
So let me guess. Dollar cost averaging applies here too.
You got it. Especially with crypto's, shall we say, volatility.
Yeah, infamous volatility, that's one way to put it.
That's a strategy these sources emphasize across all asset classes, actually.
Interesting.
The key takeaway is to have a plan and stick to it, regardless of market swings.
Discipline, discipline, discipline.
Emotion is the enemy of good investing.
Speaking of emotion, one thing that makes me nervous about crypto is security.
Oh, yeah.
It's all digital, it just feels vulnerable.
Right, and the sources definitely address that.
Okay,
Security was a big focus. One source recommended thinking of your crypto like cash.
okay.
You wouldn't walk around with all your money in your pocket, would you?
No, definitely not.
So for crypto, especially larger holdings, they recommend hardware wallets.
Hardware wallets and those.
They store your crypto offline, so it's like having a digital safe.
Yeah, gotcha. That makes sense.
And they also stress the importance of two-factor authentication on any exchange or platform you use.
Two-factor, so that's like the text message code you get.
Exactly. It's an extra layer of protection that makes it much harder for hackers to get into your account.
Okay, that makes me feel a bit better.
Good. Security is paramount in this space.
So we've got the security aspect covered, but it also sounds like staying informed is crucial in the fast-paced world of crypto.
It is. Things move quickly.
So how do these sources recommend keeping up with all the latest developments without getting completely overwhelmed?
They suggest curating your information sources carefully.
Okay.
Instead of getting lost in, like, the hype-filled world of social media, focus on reputable news outlets.
Like what?
Places like CoinDesk, Cointelegraph,
Okay.
those kinds of sources.
Gotcha. So the more established, kind of trusted sources.
Exactly. And one source also recommended following industry experts on Twitter, but with a critical eye, of course.
Right, right.
Not every tweet is financial advice.
Very true. So it's all about finding those trusted voices amidst the noise.
That's a good way to put it.
So we've covered stocks, we've covered real estate, we've covered crypto in, quite a bit of detail.
You've been thorough.
Now the big question is, how do we bring it all together? How do we create a balanced portfolio that actually works for us?
That's where it gets really interesting. The sources all emphasize that there's no one-size-fits-all answer here.
Right.
It's about aligning your investments with your individual goals, your risk tolerance, your time horizon.
Mm-hmm.
One source put it beautifully, building a portfolio is like composing a symphony.
Oh, I like that.
Each asset class is playing a different instrument, all contributing to a harmonious whole.
So where do we start composing our financial masterpiece?
The first movement is all about self-awareness.
Okay.
One source actually included a quiz to help readers determine their risk tolerance.
Interesting.
It's fascinating how much our personalities actually influence our investing decisions.
Yeah, I can see that.
Some people are just naturally drawn to, like, high-risk, high-reward ventures, while others prefer slow and steady growth.
Right.
Neither one is right or wrong. It's about understanding what feels comfortable for you.
That makes sense.
It's like choosing the right hiking trail.
Okay.
Some people love that adrenaline rush of scaling a mountain, while others prefer a leisurely stroll through the woods.
And I guess you need the right gear for your investment journey too. So once you have a sense of your risk tolerance, you can
Yeah.
start thinking about like asset allocation, right?
Exactly.
So how much do I put in stocks versus real estate versus crypto versus, I don't know, just cash?
Right, and one source recommended a classic 60-40 split.
Okay.
60% stocks for growth potential, 40% bonds for stability.
So that's like a starting point.
A good baseline.
But I imagine the ideal mix like changes depending on your age, your goals.
Absolutely. Someone in their 20s with a long time horizon might be more comfortable with a higher percentage of stocks, while someone nearing retirement might shift towards a more conservative allocation with more bonds or even cash.
It's all about adjusting the recipe
Exactly.
based on your own like individual needs and circumstances.
That's a great way to put it.
But even with like the perfect recipe, isn't there a risk of things getting stale over time?
That's a good point.
You know, the markets change, our goals evolve.
Absolutely.
How do we keep our portfolios like fresh and aligned with our evolving lives?
That's where the concept of rebalancing comes in.
Okay, explain that.
One source described it as periodically tuning your financial instrument.
Okay.
It's about checking in with your portfolio regularly, maybe once a year,
Mm-hmm.
and making adjustments to maintain your desired asset allocation.
So if like my stocks have been doing really well and now they make up a larger portion of my portfolio than I originally planned,
Right.
I might sell some and reinvest in bonds or real estate to bring things back into balance.
Exactly. It's about maintaining that harmony we talked about earlier, ensuring that your investments are still in tune with your overall financial goals and risk tolerance.
This makes me think back to that idea of dollar cost averaging.
Yes.
If you're consistently investing a fixed amount, regardless of market fluctuations,
Right.
wouldn't that naturally help with rebalancing as well?
You're absolutely right. Dollar cost averaging and rebalancing work hand in hand.
Interesting.
By investing consistently, you're already smoothing out market volatility and gradually adjusting your portfolio over time.
Okay, so we've got our risk tolerance assessed, our asset allocation defined, we're committed to rebalancing periodically.
It's a good foundation.
What else do we need to keep in mind to truly invest like pros?
Well, one of the sources had this really interesting section on behavioral finance.
Behavioral finance, what's that?
It explores how our emotions actually impact our investment decisions.
Oh, interesting.
It's fascinating how often we sabotage ourselves by letting fear and greed drive our choices.
I can definitely see that.
It's that whole buy high, sell low phenomenon we see in market bubbles, right?
Oh, yeah.
People get caught up in the excitement, they end up buying at the peak, then they panic and sell when the market drops.
Right. It's like they do the exact opposite of what they should be doing.
Exactly. So the sources emphasize the importance of creating a solid investment plan and sticking to it even when the market gets turbulent.
Easier said than done, I imagine.
It can be.
Yeah.
But one tip they recommended is writing down your goals,
Okay.
your investment strategy, and even your rationale for choosing specific assets.
So it's like, I don't know, like a prenuptial agreement with your investments.
I love that analogy.
You're making a commitment based on logic and reason, not fleeting emotions.
Exactly. It's about protecting yourself from your own worst enemy, your impulsive self.
Discipline is key. Got it. But even with a solid plan and, trying to keep a level head, I imagine there are still times when it makes sense to seek out professional guidance.
Absolutely.
So when do these sources recommend bringing in a financial advisor?
They highlight a few scenarios where having an expert in your corner can be invaluable.
Like what?
If you're dealing with a complex financial situation, like inheritance planning or business ownership, a financial advisor can help navigate the complexities and ensure you're making the most strategic decisions.
Right. It's like having a seasoned Sherpa guide you through the treacherous mountain passes of personal finance.
Exactly. They know the terrain, they've seen it all, and they can help you avoid costly mistakes.
So it's not just for like super wealthy people or people with really complicated finances.
Not at all. Even if your situation isn't particularly complex, a financial advisor can provide objective advice and accountability.
Okay.
which can be especially helpful if you're prone to emotional decision-making or struggle with discipline.
It's like having a personal trainer for your finances, keeping you motivated and on track toward your goals.
Perfectly put. And just like finding the right personal trainer, finding the right financial advisor is crucial.
So how do you find the right one?
The sources recommend looking for someone who is a fiduciary.
A fiduciary, and that means?
It means they're legally obligated to act in your best interests.
Okay, that's a good thing to look for.
It ensures you're working with someone who's truly on your team, not just trying to sell you products that benefit them.
Right, it's about building a relationship based on trust and transparency.
Exactly.
Okay, so we've covered a lot of ground in this part of our deep dive, from understanding risk tolerance and asset allocation to the importance of rebalancing, behavioral finance, and even seeking professional guidance.
It's a lot to digest.
What are some of the key takeaways you think our listeners should walk away with?
I think the biggest takeaway for me is that investing doesn't have to be this like mysterious, intimidating thing.
Yeah.
With the right knowledge and the right approach, it can actually be a really empowering way to like build a future you're excited about.
I totally agree. These sources do a great job of kind of demystifying investing
Mhm.
and making it accessible to everyone, regardless of background or experience level.
Okay, but let's be real. Even with all this knowledge.
It can still feel kind of overwhelming to actually get started.
Oh, yeah.
Like, where do we even begin?
Well, one of the sources highlighted the power of just setting small, achievable goals.
Okay.
You don't have to become a Wall Street wizard overnight.
Right.
Start by investing a small amount each month, even if it's just like 50 or $100.
Okay.
The important thing is to build the habit and just gain experience over time.
That's a really good point. It's like training for a marathon.
Exactly.
You don't start by running 26 miles, you gradually increase your distance.
You build up to it.
And I guess having the right tools and resources can also make the journey a lot smoother.
Oh, for sure.
Did these sources talk about that at all?
They did. They mentioned some great apps and websites that can help you manage your investments and track your progress.
Okay, any that stood out to you?
Yeah, there were a couple that really caught my eye.
Like what?
Well, there's Acorns, for example, which rounds up your spare change from everyday purchases and invests it automatically.
Oh, I've heard of that. It's like investing on autopilot.
Exactly. It's
Yeah.
a really clever way to just make investing a seamless part of your life.
I like that.
And then there's Robinhood, which offers commission-free trading.
Okay.
So it's a great option for beginners who want to maybe dip their toes into stock picking without incurring those like high fees.
Right. Those are great starting points, but what about for those of us who, maybe want a more hands-on approach?
Yeah. If you're ready to really dive in.
Did these sources talk about any more advanced tools?
They did. For researching and analyzing investments. Well, there's Seeking Alpha, for example, which provides like really in-depth analysis and research reports on a wide range of stocks.
Okay.
So it can help you make more informed decisions.
And what about for real estate?
For real estate, they mentioned Zillow and Redfin.
Oh, yeah, I've used those.
They're great for researching property values, market trends, potential investment opportunities.
It's like having a whole team of financial analysts at your fingertips.
It's pretty amazing how much information is available these days.
But with so much information, it can also be hard to know what to trust.
That's true.
How do these sources recommend, filtering out the noise and finding those reliable insights?
They really emphasize the importance of critical thinking
Okay.
and developing your own investment philosophy.
Mm-hmm.
Don't just blindly follow the crowd or the latest hype,
Right.
Do your own research, understand the fundamentals of the investments you're considering, and align your choices with your long-term goals.
So it's about being like an active participant
Exactly.
in your financial journey, not just a passive passenger.
I love that analogy.
But even with all the best tools and resources,
yeah,
there might be times when we need a little extra guidance.
sure.
When do these sources recommend seeking out professional help from a financial advisor?
Well, they highlight a few key situations where having an expert in your corner can be really valuable.
Okay, like what?
If you're dealing with a complex financial situation, like inheritance planning or business ownership, a financial advisor can really help navigate those complexities and ensure you're making the most strategic decisions.
Right. It's like having a seasoned Sherpa guide you through, the treacherous mountain passes of personal finance.
Exactly. They know the terrain, they've seen it all, and they can help you avoid costly mistakes.
So it's not just for super wealthy people
No, not all.
or people with really complicated finances.
It can be helpful for anyone.
Okay, good to know.
Even if your situation isn't particularly complex, a financial advisor can provide like objective advice and accountability,
Okay.
which can be especially helpful if you're prone to emotional decision making or you struggle with discipline.
It's like having a personal trainer for your finances, keeping you motivated and on track toward your goals.
Perfectly put. And just like finding the right personal trainer, finding the right financial advisor is crucial.
So how do you find the right one?
The sources recommend looking for someone who is a fiduciary.
A fiduciary. And that means...
It means they're legally obligated to act in your best interests.
Okay, so they're legally bound to put your needs first.
Exactly. It ensures you're working with someone who's truly on your team, not just trying to sell you products that benefit them.
Right. It's about building a relationship based on trust and transparency.
Couldn't have said it better myself.
Okay, so we've talked about tools, resources, even professional guidance. But one thing that really struck me in these sources
Yeah.
was this emphasis on continuous learning.
Oh,
It's
absolutely.
not a set it and forget it kind of thing, right?
Definitely not. The financial landscape is constantly changing. New investment opportunities are emerging.
Mm-hmm.
So staying curious and informed is really crucial.
So how do we do that? How do we stay on top of things without getting overwhelmed?
Well, one of the sources recommended carving out dedicated time each week to, read financial news,
Okay.
listen to podcasts.
Like this one.
Exactly. Or even attend webinars or workshops.
Right. So it's like treating your financial education like a muscle.
I like that.
You have to keep working it out to stay in shape.
You have to keep learning, keep growing.
What are some good resources or starting points for people who want to, dive deeper?
Well, one of the sources recommended starting with some investing classics,
Okay.
like The Intelligent Investor by Benjamin Graham
Okay.
or Rich Dad Poor Dad by Robert Kiyosaki.
I've heard of that one.
Those are good foundational books.
And for people who maybe prefer like a more visual learning style.
Oh, yeah, there are tons of great documentaries and YouTube channels dedicated to personal finance these days.
Really?
It's amazing. You can learn so much from those.
Cool. So it's all about finding what resonates with you and makes the learning process like enjoyable.
Exactly. Find something that you actually look forward to.
Right. Make it fun.
The key is to stay curious, keep experimenting, and never stop learning.
Well said. I feel like we've really gone deep on this topic, covering everything from the basics of investing to some really like sophisticated strategies.
It's been quite a journey.
Any final words of wisdom for our listener as they kind of embark on their own investing journey?
I would echo what a lot of the sources said. Investing is a marathon, not a sprint.
Okay.
Be patient, stay disciplined, and focus on the long term.
Mm-hmm.
And remember, the best investment you can make is in yourself.
Yourself.
Your knowledge, your skills, and your ability to adapt to a changing world.
That's a great way to put it.
Yeah.
It's not just about building wealth.
Right.
It's about building a fulfilling life.
Exactly.
And I think investing, when done right, can be a powerful tool to help us achieve both.
I couldn't agree more.
Well, that brings us to the end of our deep dive into investing.
It's been fun.
Hopefully you're feeling inspired and empowered to take control of your own financial future.
Absolutely. Go out there and make it happen.
We'll see you next time for another fascinating exploration of the world around us.
Until then, happy